Good morning and welcome to Trade Live with IG on Thursday, the 15th of May. How the devil are you?
How the devil are you, sir? Good morning, welcome. I've just seen Jesse 14 hit a nice drop in oil overnight. I actually hadn't seen that this morning yet, so thank you for that, Jesse.
Yep. So we're talking about
how are we doing?
Yeah, can we just talk about the little dance that we were doing in the studio here?
Some great tunes going on.
Yeah, just a little warm up to get the body going. It was just a couple of tunes. You standing up today? You're not sitting down?
I've decided to start standing up because producer Fred said we were not allowed to stand. But I feel like a bit more. I mean, Theresa May going on.
You must, as long as you've got like your foot marks,
yeah,
so you don't come out of shot. Because I get a bit fidgety. So I'm a little bit over here, I'm a little bit over here. I need to stay still. So that's why they anchor me to a seat.
I must admit, the bar stools that we've got in the studio aren't exactly the comfiest either.
No.
Or stable.
No, and my big legs don't quite fit under the table, so I just have to like last minute lower to make sure that I'm in shot. The things we have to do to get this show looking as good as it does.
So what do we have coming up on today's show for you? Well, it's a packed one. So we've got Luke Moore with us through until 8:30 when Philly is joining me for Investing Experience. So if you caught Laura Ann Moore yesterday, thought that was a great interview with her talking about her investing journey. Philly used to be a wealth manager and has actually gone more into advising people one-on-one and with her own business now as well. So that'll be really interesting. 8:35 after that.
We got the all sessions opening up at 9, and then at 9:10, Chris is going to be coming in to talk trade expectations, and then to round you off for the day, you've got Jack joining from the trade desk.
Or Jack, as Angeline calls him.
Yeah, isn't Jack? Every time I hear her say that, it reminds me of the son off of The Incredibles. Isn't Jack?
Wow. Yeah. That got the gallery excited, that did.
Every time I hear it, I'm like, Jack, but that's the baby. I feel like he needs a new nickname. We've got to get him a new nickname. Chat, if you can come up with a new nickname for Jack that's not Jack. And it's not a 5.
I just see, good morning to everybody on the chat. So, DAWI Spiders, we got Neil, we got Maturin, we got the usual crew. However, Kemi joining us this morning. I met Kemi for the first time last night. I was at the Alpha Group, which is HTB in Brompton. Kemi was sitting next to me, and of course, as always,
plug the show.
Plug out the show, yeah, any opportunity. So very good to have you join us this morning. And then Gavin Acker's with us as well. So now today, I've got to admit, the market was a little bit dull yesterday. There was a lot of consolidation going on. But today we've got a plethora of economic data. Some of which we've had out in the UK, but a lot of which is coming up at 1:30. We're going to go through that in some overnight action. So before we go into that, let's take a quick look at where we are with the futures, because I want to have a look at oil. Down 2.3%. That is an interesting start to the morning.
Yeah, have you seen the stories about Iran?
No.
That's driving this. So this is interesting. Chris and I were just chatting about this on desk. So Iran, obviously heavily sanctioned for their oil producing.
This is the talks with
Trump
Qatar.
Is supposedly going to offer them a lifting of the sanctions for certain concessions made with their nuclear program.
Right.
So they've got plenty of nuclear, plenty of uranium, and they're committing. And NBC, it's almost as if I was prepared for this. If you could share my screen, please, gentlemen. We have seen overnight, top Iranian official says that Tehran would forego their highly enriched uranium in a nuclear deal with Trump, which is a big deal. And if you keep scrolling down into the story here,
easy seeing they've got you on the targeted adverts.
That's just, how do I move that across? Just there you go.
I'm sure it probably adds to the show.
Oh, there you go.
Nice little trip to Ibiza. I'm looking
and,
for a hotel, actually.
Oh, look, a Mini Cooper. I've been sat next to Luke for too long.
That's hilarious.
Clearly getting advertised Mini Cooper.
Yeah.
But the point is, Ali Shramkhani, whose name I hope I haven't butchered, a top military and nuclear advisor to the supreme leader of Iran, has said that Iran would commit to never making nuclear weapons, getting rid of its stockpiles of highly enriched uranium, and allow international inspectors to supervise the process, all in exchange for the immediate lifting of all economic sanctions on Iran. This is a big story.
That really is, isn't it? And for not just for, you know, talks as they're going, Trump's, you know, future Nobel Peace Prize, but also for the world and in Middle East. I mean, that is, that's really, didn't surprise that one from his Middle East, because we're not seeing the same kind of progression with Russia and Ukraine talks. That, all right, they're going to meet today, but we're talking the minions.
Yeah, this is another thing. Just before we move on, I love using Perplexity as an AI tool. Please let us know in the chat what AI tools you use, because I absolutely love Perplexity.
Right.
Think about it as the search engine for LLMs is the best way to think about it.
Okay.
So I typed in this morning, you know, I wonder what sanctions under Iran have looked like and what they've impacted. And you can see my prompt here. How much oil does Iran have at maximum capacity with no sanctions? And how much have they been able to produce over the years for the past 10 years? And give me a table and chart. And within seconds, you've got a maximum theoretical production of 7 million barrels per day.
Wow.
And this is how they've been floating. So they've averaged out at 3.5 million barrels per day over the past 10 years. Yeah. So that, my friend, is why oil is down 2.5%, because if you lift those sanctions, more supply comes onto the market.
It's just really hard to see any upside for oil. Trump doesn't want it. He wants lower oil, drill baby drill.
Do you reckon that's why he's doing this?
Oh, I think definitely part of it.
Keep the price low.
You don't think it's really for world peace, do you? And also we've got Saudi that are pumping more, increasing production. And then we've got a softening of global demand because of growth. So quite, you know, just really hard to see upside for oil.
Yeah.
Famous last words.
How's the chart looking? Have you got it up on
the old oil?
Should we have a little look how it's trading?
So let's get that one up. On WTI, of course, the favoured. I'm never a Brent guy. Always WTI. I've never traded Brent, I don't think, in my life.
Isn't Brent is oil from the Middle East, though? And
WTI is US.
Is effectively shale and bits and pieces that flow into the US, right?
Not shale.
No?
I mean, shale might be included in it, but you know, it's oil.
Right.
WTI. Yeah, there we go. Okay, so right down. What have we got on the lower end there? I've still got it a little bit zoomed in. 56 it got to. Actually, it double bottomed at 56. Is that a range? 56 to 66.
I mean, it is. I mean, you look at it. That top exists, or a short term at least.
Yeah.
I mean, if it's just going to yo-yo now between these two prices,
it doesn't feel like we got a 75 in us.
No, but so you know, you wouldn't necessarily go short bang on that recent resistance, but you might sell calls. You know, mid 70s, low like 72, 73, something like that, perhaps.
It also ties into his, you know, Mr. Too Late on cutting rates, right? If you're going to annualize a $61 oil price versus what were we, 75 to 80 this time last year, then
what's that?
Rate should
15% lower energy costs.
Yeah. Well, probably not. Not if you're with my energy provider.
Well, no, because it just keeps going up and up and up and up. It reminds me, there's another, power we're going to hear from later today, 1340 or 140 rather. There is another website which I love looking at, which is called Trueflation. I'm giving you all my secrets today, guys. This is it, right? If you have a call and you think, oh, Luke knows what he's talking about. I don't. I just know how to find things very, very quickly.
I think that's what a lot of people do in their jobs, isn't it?
Yeah, maybe.
The ones that do well.
Trueflation is very cool. So Trueflation is supposedly tracking inflation in real time. And you can see that it believes that US inflation is down at 1.8%. And the official reported figures, CPI yesterday was 2.3
on the headline, 2.8 on the core. The core is the tricky one. Can we get a Trueflation core up?
What you can do is, I believe you can click into this. No, I think they may have put it behind a paywall.
Well, I'll tell you what, in the meantime, let's take a look at what's coming up today in the US. Is that it?
This is, so what it does is it breaks down each individual sector and tries to track it. So what would be in core? What is core? It's ex-fuel, right?
Food and energy, yeah.
So if we strip out, energy's not in here, is it? No. Others.
Right, come on, great television.
Yeah, sorry.
Let's go to the economic calendar, please, guys. So what we got coming up? We got industrial production coming up for Europe, and then the big ones: US retail sales expected at 130. Estimate flat as a pancake. Not what we saw in the UK. UK consumers are out there spending. We got initial jobless claims, 229 estimate, and remember that was higher last week. That came in above 240. And of course, we got PPI. So if we can switch to my screen, please, you can see what the expectations are here. That's the number on the right-hand side. So PPI 0.2, core 0.3. That's, of course, interesting because that's where you get the real feel of the tariff effect. Mm-hmm. And then we've got, those...
I think those retail sales is going to be really interesting because, of course, April was the crash and then the bounce. So I certainly knew that I was consciously spending less money for the first couple of weeks.
Right.
Of course it is. You're looking at your account getting absolutely destroyed.
Yeah.
And you think, probably shouldn't be going out for dinner once or twice this week. Let's just relax. Yeah, maybe you should go out 3 times instead.
Yeah. I must admit, whenever I have a really bad day of P&L, I go out and buy a new pair of trainers.
Is that right?
Because it only happens once a year.
But is that why there's so many shoes just dotted around the street?
Yeah, just trot them away. That's why Nike's starting to turn up. Because when you have a good day, right, all right, you feel good, obviously, but you shouldn't be cheering at that point.
Yeah.
It's when you have a bad day, you want to cheer yourself up a little bit. Yeah. So that's my shoe therapy.
I don't know. I like to feel the pain. I like to feel a bit human.
Doesn't do you any good because when you have a great day, you shouldn't be going around running, popping bottles of champagne or anything.
No.
Just be part of your business.
I agree, but what I mean is I think you should be conscious that something bad has happened and not react to it. So I don't sit there and go, right, I now need to go and do this. I need to go and do this. I'm just very conscious that, okay, something bad has happened. It was pretty big. Market sold off 30%. Maybe I shouldn't go and buy whatever, right? And it was just that kind of thought. It wasn't a catastrophic change, but I do wonder if that kind of mentality is going to impact into retail sales. Because
it should.
But you're also going to see, with retail sales, would Chinese goods be included in that? So your Temu and your kind of Alibaba stuff. So stuff that was meeting the de minimis ruling. How much of that will impact retail sales? Because that basically got finished, just stopped. So I wouldn't be surprised.
Yeah, but that's not retail sales, is it?
Yeah, well, it would be, of course. Because individual, depends how they calculate it.
I think if you're ordering from abroad, I don't think that's a retail sale.
I wonder whether this is a data point that the market will shrug off because they say, well, April was very different to now. So it's interesting to know, but it's not really going to impact anything. But you have got Powell speaking 10 minutes after all these figures come out.
So that's the interesting one. So really, between 1:30 and 2:30 today, just be aware that you could get some moves. But closer to home, we had some good news from GDP this morning. So that came in at 0.7% quarter on quarter, 1.3% year on year, and then the month on month for March came in 2.2 ahead of expectations. So, really, Rachel Reeves has already been out congratulating herself, and industrial production was the disappointment. That's down 70 basis points. But what has that done to cable, I hear you ask? Well, if we get out of the oil.
Before I came in, it was well on its way to 133. Where are we?
Yeah, that's exactly right.
Yeah.
So 132.97. So some interesting moves. We saw gold get demolished yesterday. Remember, as soon as that trade deal came out, that's what we were shorting, 3,270. Still short from that. 3,260, sorry, is the position I've got left. Still short £10 a point there. I think it goes to 3,100. So we've got another 1% to go. Right, shall we go on to the newspapers, Mr. Moore?
Let's have a little look at the newspapers.
What is front page of the Financial Times this morning then?
Well, it's just refreshed. It's now about it is now about GDP, but there's an interesting political maneuvering happening. You've got Trump serenading around the Middle East, right? Very grand.
Serenading, love
very, very grand, very opulent. Pretty cool. Some of it looks like. I was watching the Qatar trip yesterday, and it just, as a spectacle, it's very impressive. Right?
Yeah.
You can't deny that. What are we doing? Well, we're bickering with the EU about trade
Fishing
deals.
rights.
Yeah. Fishing rights. So the latest talks
Are we going to
are.
cover this?
Where's the biggest headline of the FT this morning?
Yeah, but what stocks is it moving?
Well, none, probably.
Let's move on then.
Fine. Anyway, they don't like fishing rights and youth mobility. There
It's
you go,
just so
politics.
depressing. All the ever since Brexit, the same bullshit like gets spoken about with fishing rights in the channel. It just,
Yeah.
I can't remember what stock it moved last.
We said this actually. They're saying one thing and doing another because they signed that deal with India, and seafood was a big part of the deal with India. So I'm not surprised that they're upset. I don't know any fishermen, but if anybody does on the chat, I'd be really keen to know what the temperature is like for UK-based fishermen. It just seems like I think it's just very bad.
Talking about cold places, producer Phil, I see in the chat. Producer Phil has given us, he's off on a hike today, up to the top of a mountain in, where is it you are, producer Phil? Mallorca, Magaluf. So yeah, let us know there. And before we move on to National Grid, Aviva, United Utilities, then let's take a quick look at the Times as well, see if there is anything interesting there. Well, there is. There is a Warren Buffett interview with why he stepped down at 94. He got old.
At least he's honest.
And this is particularly worrying because he says that he was occasionally losing his balance and he would struggle to remember a person's name. Monkey Man, losing his balance yesterday on United Health, a different kind of balance.
That's a story to cover if we've got time.
Yeah.
That is definitely something to talk about. And you're saying he's now old. We don't know how old Monkey Man is. Do we?
We're narrowing it down by the day. He gives us clue after clue. We've got Paul Taylor, don't be so shellfish about fish.
Hey!
And yeah, that's pretty much. Now, Financial Times, there is a wonderful article from Claire Barrett today, and it's talking about ISAs, the move from cash ISAs to investments. It's a real interesting look at what Rachel Reeves' plans are, what she wants to achieve, and why reducing the cash element will not necessarily change things. It'll just stop people putting money into
the one thing.
ISA.
Well, the one thing that I do agree with in this article is you've got to make them less complex, right? And we can be proponents of this now because we have a hybrid ISA. If you have an investment in an ISA, SIP, or shared dealing account with us now, we're paying you interest on your uninvested cash. That is now technically a hybrid cash and investment ISA.
Yeah.
So they're saying you just need to simplify this. You want to be able to give people the ability to save cash as and when they choose to, because it is an important part of any portfolio strategy.
Definitely.
But not have to open a second account to then go and put them in a stocks account. I think it probably comes down to that more than anything. If it's a structural problem that people aren't investing.
Well, this 6% number is scary.
6% of UK adults have a stocks and shares ISA.
I would have been up in the 20s. 6% is a scary number.
Don't forget your circle of influence is probably quite biased by that. Same as mine. A lot of my pals do. But I imagine
Well, so
a lot of people that are not watching this or listening, and you know,
there's a poll. Do you have a stocks and shares ISA? Now, I would hope if you're watching this channel, then we're in the 80s.
Yeah, you would hope so. Yeah,
we'll see. All right, pull up, please, team. We got.
Interesting there. So there's the total address.
Cam today in the studio.
There's the total addressable market, right? The financial regulator believes 4.2 million consumers hold more than 10,000 of their investable assets, mostly in cash.
Yeah,
that's a lot of people. 4.2 million is a lot of people, and there's a lot of people there sat in cash. And as your conversation with Laura ran yesterday, you know, she said the biggest thing was when someone told her that holding it in cash is losing money because of inflation. That's the story. That
not if you're holding it with IG with as a new customer getting 8.5%.
Whew, proper deal, that, isn't it?
Yeah, I'm trying to see how many times I can change my name and open a new account.
How many family members you can just like back to the back
exactly. Mum, get the link up.
I sent it to my mum, and
Did you?
So I think I've got my mum, I think I've got my brother and my brother's partner all involved. So get it in.
Yeah, I need to change my provider because my provider charges 1% FX charge for buying US stocks.
Yeah,
and it angers me every time, but the paperwork to change is pretty gruesome, but I'm going to have to pull the...
Not with us. Do it all online.
Oh, really?
Yep. If you open an ISA with us, go to the website, go to the dashboard.
Right.
You go to live accounts, make sure you're viewing your ISA transfers. You fill in the online form. Where is it? What are you holding? How much do you want to send to us? And you get our good pals in the transfers team to do it all for you.
Really?
Yep. This industry is
talking like 10 minutes.
I reckon. Do it on air.
Yeah, that's tomorrow's segment. Rich is going to transfer his ISA to get 8.5%.
It is slightly crazy how antiquated that entire division is. From my experience in working with clients, moving things around, we can do our bit very quickly. So we can get our paperwork, we can get our transfers team on it. Trying to get a reply from somebody else's transfers department is a flipping nightmare.
Yeah, I can imagine.
Because there's no revenue in it, so people don't prioritise, they don't resource these parts of their businesses very well. So
there we go. 81% stocks have a stocks and shares ISA. 81%. No, 18%. My sister's probably one of those.
I think Boise's called it. You know, not everybody's got an Aston Martin, Rich.
Those were the days.
I certainly don't. Did you have one?
2015. I got back from South Africa. I worked in Johannesburg for 2 years, and had a beautiful Range Rover around there. As you actually need one there.
Yeah.
And then got back, and in South Africa I started work at 7 a.m.
Mm-hmm.
In Canary Wharf I had to be in for 6:10. And I thought, right, if I'm going to go through that pain, I want to be driving down the embankment in something decent.
Yeah.
And actually put a smile on my face every morning. And a DBS, pressing that ignition button, puts a smile on your face every morning.
As opposed to getting the tube.
As opposed to, well, you couldn't. Not at that time.
It wasn't open.
So
there's no...
Quarter to 6, I would have had to get the bus to the tube station at like 5:30.
Oh, and you'd fly straight through.
Yeah. But I tell you what, bought the Aston, and do you know how much it cost me in depreciation over 3 years?
What did you pay for it?
So I paid 82.
I reckon you sold it for 75.
76.
Oh, get in. There you go.
You know your market. So 3 years. I had an Aston Martin for 3 years for £6,000.
Yeah. Resale
So,
market.
Boise, I mean, that's one good trade away.
Yeah, it is. Speaking about one good trade away, let's take a quick break and then we'll be back for the opening bell shortly afterwards.
Oh, we got music on.
Bring me me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Right, we've got some UK numbers to go through. What's reported this morning? Luke Moore, take us through it.
So we have, if you want to jump my screen up, we can jump straight onto the platform and we can look at the big stories. So Aviva on there reported a 9% rise in its first quarter general insurance premiums. Do we have an early call?
Unchanged. Boring.
Boring. Okay, National Grid. They beat their annual profit estimates, helped by higher earnings from its UK electricity transmissions and its US business.
Up 2%.
Up 2%. B&M have got a new CEO, not that interesting. Premier Foods, however, owners of Primark, have reported a 6% rise in annual trading profits.
They don't own Primark.
Premier Foods?
AB Foods.
Oh, I'm thinking of ABF.
Premier Foods up 2%.
Excuse me.
Now, interesting. One of my friends went out with a buy idea on B&M yesterday. Certain David Bell. And he generally managed to call Marks and Spencer's well, but I don't know much about B&M at all.
No.
But
I used to buy all my stuff when I was moving around university halls. I used to run into B&M and pick up all my pillows and bits and pieces. ITV have reported a first quarter performance bang in line with its guidance. Do we have an early call on ITV?
ITV is no, we don't have one there. We've got 3i Group at market and Flutter at market. No other real bit. Oh, Circle up 2% with 3 new long-term markets.
Yeah,
with the Navy.
What I also just want to say is, whilst we were on break, oil has taken another leg lower. Trump is talking and he's saying that they're getting very, very close to this deal with Iran. So it is now down 3.2%.
My screen up, please, guys.
And I get the bell.
So on the right-hand side of our platform, you've got a Twitter feed, don't you? Which not not everybody knows about?
A curated Twitter feed, not just a Twitter feed, a finely curated Twitter feed produced by the fine traders here at IG. And so I remember when we built this, there was a big load of feedback from clients that said, we need real-time information. We don't just want the news, we don't just want the feed that Reuters gives us, we want real-time data and influence, and that is what the Twitter feed has. And it was on there, so Trump's talking right now. So if you want to load it up, you click the button in the very top right-hand corner of the platform. You should see notifications, posts, or all. Notifications is going to show your trade notifications, so whether you amend a stop, open something, or close something. Posts shows you our Twitter feed. And if you can see here, there's an account that we follow called Financial Juice, who are excellent. And they are, in theory, in fact, if we're on my screen, let me just zoom in for you up here. So I'd like you to click this button in the corner, and then this is the feed you get. So Financial Juice is talking in real time as we go here. Iran agrees to the terms, we want them to succeed. This is from Trump's perspective. The previous administration, we are losing the Middle East. And we keep coming down here. We've raised trillions in investments from this trip.
Yeah, that's the important thing is that he thinks he's getting close to a deal. Oil did take a move lower than that. Now, moves this morning. That Tesco number is a dividend. So do not panic, all you investors in dividend there. That is 2.5%. So it's actually up 30 basis points on the day. Other dividends today, Unilever, which is just under a 1% impact. BP is a 1.5%. So BP getting smashed by the oil, but the real move's only down 2.5.
Well, it's still, even if it was just down 2.5, that still puts it at the bottom of the charts, doesn't it?
Yeah.
Regardless of the dividend.
Yeah, absolutely. And also GlaxoSmithKline 1.2% dividend, and Shell is a 1% dividend. Huge dividend day.
Well, it's Thursday, isn't it? Yeah.
Yeah, but all
come together.
In terms of how big, GSK, BP, Shell, and Tesco, that's a big component.
I'd be keen to see how much we actually adjusted for the FTSE last night, because that would be a fairly lumpy one.
Right, so we've got, Rank Group up 5%. Now, JD Sports, I wanted to get involved. JD Sports, the reason I'm buying them is because Foot Locker are going to get bid for.
Foot Locker have been bid for by Dick's Sporting Goods.
So this is big. I'm surprised it's only up 3.
What did you say? The Dick's? What did you say? The Dick is big?
Excuse me?
What, is that what you just said? Oh, it's a big deal. Sorry, okay, sorry.
Right, it is a big deal. It's now but they're surprisingly small market cap wise. You're blushing. So yeah, up 3.5%. JD Sports, 40% of their sales are in the US. So this is particularly interesting. I almost forgot about that this morning.
So if the US sports retailers are consolidating, why is that positive for JD Sports? Because you've now got a bigger competitor in your back garden, more pricing power potentially.
Yeah, but they're in the shop window. Literally.
That's what they're saying. That's what they're saying. So they're in the shop window.
That's what I'm saying. Yeah, nobody's saying it. But this is a particularly positive sign that somebody's willing to buy a business that's identical, let's be honest, and pay a significant premium for it. So yeah, that's JD Sports. Andrew McKelvey will be laughing that I said no to it at 78. I said no at 85, and now it's 93 pence. I'm getting involved.
The old classic.
So National Grid up 2.5% on the back of numbers.
Yeah, we have also seen some more M&A in the UK. Confirmation of a deal that's previously agreed. Greencore, the food manufacturer distributor, have agreed to buy Bakkavor for £2 a share. So that's fairly interesting. They closed at £1.87 yesterday, so there's a little premium on those this morning.
But yeah, nice little positive move for the likes of Reckitt's, Kingfisher, the owner of B&Q. We've got Sainsbury's up 40 basis points, and VOD's back down to 68.5.
How are my SMTs doing? Are they moving around?
No,
with a little bit of a pullback in US markets last night? Probably. Let's have a look.
Yeah, not really. As we go down the list, there's
Down 0.5%.
yeah, Anglo's down 1.6 as well. Lloyd's at 75 pence. Now, is that
It's going to be a recent high, that, isn't it?
I think so. Let's get into the chart there on Lloyd's. What's gone on there? This is one of these stupid.
Lloyd's has been trying to break.
Look at that. Look at the way that ruins the whole chart. It does my head in.
It's a CFD thing. It doesn't happen on spread bet accounts. If you want to have a little look at...
We're right there, aren't we? In fact, it has broken out.
Yeah. So I don't know if you want to... Yeah, that's exactly it. Yeah. I was discussing this.
Brilliant.
So the client that I have been on the show several times before, who trades the UK banks with my desk over the phone, we've been looking at this 74p level since the start of the year, really. And there's been a big seller, but clearly he's been cleared.
The seller
$74.90.
is done. And are we all settled with the car financing?
They didn't make any additional provisions in the last numbers.
Yeah, but the court case is still going on, I
Yeah,
assume.
it's still going on, but I think the fact that the bank has made its provisions and that's now in the price, and they were confident they don't need to make any new provisions.
US President Trump, India has offered us a deal to charge us no tariffs.
You're getting that from your Twitter feed, look.
Yeah, look at that.
Sort him a
My
new
new
toy.
toy.
Yeah, this will do you out of a job.
I had to switch off Twitter notifications on my phone because it's just all the time.
Yeah.
Good, Andrew McKelvey smiling. Yes, I thought he would be right. Let's take a look at those Foot Locker information then, because it is relevant to JD Sports. So.
While you're doing that, I'll just take a quick question. Fatboy Fur, can you get the Twitter feed on the app? No. Have I asked for it for years? Yes. I will try and try and deliver it for you.
I'm sorry, if Foot Locker is up 60% today, then JD Sports should be up more than 3. 60% for identical business.
69% they closed last night. That is just you cannot write that.
No. Right. So, yeah, buying Foot Locker for $2.3 billion. Can we just look up the market cap of JD Sports as well?
Yeah, I'll do that.
The proposed deal is for $24 a share, representing an 86% premium to the stock's last close. Two companies, no response, and Foot Locker down 40% so far this year.
JD Sports, 4.7 billion.
So a bit of a bigger chunk. Well, mind you. Oh yeah, that's including. But I didn't know Foot Locker was in that much turmoil with regards to its.
Well, I suppose you've got to look at the reasons as to why. So why has it been beaten up so much?
A lot of the problems with the tariffs, apparently, but also
that's been going for years though. It's been weak.
Yeah, as Ronnie always points out, it's not particularly nice to go into these shops. Whereas a Dick's Sporting Goods is a lot more like going into. In fact, is there not one on High Street Kensington?
A Dick's Sporting Goods.
Yeah.
I didn't think there was any in the UK.
What's the shop? You can literally go in, and if you want to buy, like,
are you thinking Decathlon?
Decathlon, sorry.
So it is. It's much more. It's much more Decathlon-esque, where it covers sports, right? So you can buy a canoe, you can buy skis, you can buy shoes and trainers.
Rollerblades.
Yeah, it's brilliant.
We went rollerblading around the shop.
Yeah.
That's how big it is.
Yeah, well, I remember when I was a kid, I grew up on the north coast of Kent, and the nearest Decathlon was in Lakeside, Thurrock. So you had to come across the QE2, jump across.
Nice.
And it always felt like such a big day out because you're going over the bridge. When me and my brother's 4 years younger than me,
Right.
and mum and dad would want to be up buying ski stuff and backpacks and rugby kit for the year, and me and Todd would just piss about all day. Go and get some hockey sticks and start playing hockey down the aisles. You could just do all sorts.
Well, you couldn't do that in Foot Locker, could you? Jeez.
Well, I suppose what Foot Locker have had a challenge, and I probably is the same as JD Sports. I'm going to genericise here, but if you go into into one of these kind of shopping centres and there is a shop like this, it's usually packed. It's usually quite difficult to find someone to go and try some shoes on.
Yeah.
And people are just sat there trying shoes on, taking photos, and probably not buying anything.
Right, we talked about it so much. You know what? I'm going to add to it. So I'm going to buy another 12,000 shares at 92 pence. And let's see how that one does as the day goes on. What have we not looked at? We haven't looked at Europe. What is happening in Europe? Ubisoft down 21%. I do not like the look of that, Luke Moore.
Let me have a look and see why.
What is going on in Ubisoft? BMW down 4.7. Is there a dividend there? RWE down 3. Siemens down 3.
So Ubisoft is on numbers. So the French video game producer published full-year net bookings down 20.5% at 1.8 billion and said it expects stable bookings for next year with a roughly break-even operating income. So 20% booking down, full-year net bookings down 20%, and they've taken 20% off the share price.
Yeah, those German names are getting hit there as well. Is the DAX down, or is that dividends as well?
The DAX wouldn't be down on dividends.
No, sorry, that's what I mean. Is it real move or are they dividends? Yeah, it's down 60 basis points. As in, why is BMW down 5% is what I mean. And RWE weak as well.
I will talk amongst yourselves. We'll try and find something out.
So, yeah, Waka Waka. Waka Waka makes a great point that we have not covered in a while, and that is the move higher in yields. Since the Bank of England cut rates, then we are... just screen off for a second, please, James. Let's find the bonds, CNBC. The bond rates are getting pretty high again. There is your 30-year approaching 5%. Remember, 5% a big level, as it is in the 20-year, and they're both right there, aren't they? So, of course, it's a little bit different. In treasuries, it's the positive of the China trade deal. The markets skyrocketed again. But I would be very interested to hear Poppy's view on this. Poppy's our bond expert. And, yeah, up to near 5%. But look at gilts. Gilts are not having a good time of it. 5.46 on the 30-year. Great for the savings accounts.
Yeah, not great for those wanting to see rates cut and economic growth. I mean, it doesn't bode well for Rachel when yields are doing that. It doesn't give her much space at all, does it?
Oh, Bank of America raises price targets on Nvidia and AMD.
Well, the advanced money destroyer has been absolutely flying, isn't it?
That's money destroyer. That's
the
right.
advanced money destroyer, as it was known on Twitter, has been absolutely flying the last couple of days.
So yeah, just keep an eye on those bond yields because those are a little bit worrying. They're just coming onto that radar. You generally don't get an equity market that carries on going higher if those bond yields are starting to stifle long-term growth and borrowing. Thank you, Arsik Sena. Checked out. BMW is ex-dividend today. That was just a bit of a weird one on the European moves. Do you want to take a look at FX and some commodity moves, Mr. Moore?
Yeah, let's have a little look. I think oil was the big one there. So down 3.4% now, 3.5%. Gold, I think that's the 6th day in a row of negative performance. You're just seeing an unwinding
trade deal,
of this kind of risk. What else have we got going in there? Copper again. Copper's starting to wobble. How does that look in terms of a chart? Pull up the copper chart for us.
Well, would you like the high grade or the LME?
Oh, that high grade stuff.
High grade.
Give me that high grade.
Because this one, of course, had a premium in it because of tariffs. So I think that's what's possibly unwinding. But yeah, definitely not. I imagine that would be a different picture if we look at the LME.
Yeah, I mean, that is... So Dr. Copper, okay, they always say that it's kind of forecasting future economic growth because it's such an integral part of EVs, of industry. And that's been coming off since the kind of backing off of the trade deals, which is interesting. And then this is LME copper.
Yeah, so that's very different.
Moving. And so just for the viewers, and actually for me, what would be the difference between the two? Obviously, from where they trade is one thing.
Well, no, where they're held. So the LME is literally, holding this copper, whereas high grade is in the US. Okay. And you've got, the problem was going to be that if he put tariffs on copper, then obviously if it's already there, then that was going to be more valuable. So that's the unwind now of the high grade versus this LME, which has bounced nicely, hasn't it?
Yeah, it has. But look, markets like to fill gaps. And you see that gap there on the trade deal, and we just didn't. We got rejected.
Yeah,
which,
it did,
could signal that there's a little bit more weakness. If it's been rejected, and markets like to fill them like a magnet, we'd have to see how that retraces. What about in the FX space? Have we got anything going on? How's cable doing post GDP? Not quite 133 just yet.
What do you think of cable here?
It's kind of stuck. I mean, it's I don't.
If you go out on the streets, you would not say that this country currency should be outperforming versus the US.
No, but you also look at it. It's come from 122 at the start of the year to 133 now.
Yeah,
one hell of a move.
That's what I mean. I think it should be 125.
I don't know if 125. You got to think about what's pricing this in. The US is cutting.
No, it's not though.
No, you're right. Sorry, you're right. We're cutting.
Yeah,
we've cut.
Yeah, it should be 125. I do not understand a 133 number. Not with the trade deal done. If it last week, then there's arguments for it,
because
right?
The trade deal's done. You've done a deal with India. There's more progress. But I suppose you haven't yet seen what this has unlocked. So we don't know what this does to our retail sales. We know that GDP is better than the market was looking for. Mm-hmm. So you'd argue that the data is, someone's reading the data incorrectly. The economists are reading the data incorrectly, maybe underestimating the strength of the economy that we've got. Yeah. Maybe that's what's being reflected. Maybe we're wrong. We're walking down the wrong streets.
If you listen to I tell you what, we walked down the wrong street in Chester last week. So Pete Ward, we're at the races, right? We've had a fantastic day. We've had 0 winners, thanks to Pete's tips. And we come out of the racetrack, and you can turn left or you can turn right. We were 50 meters down the wrong direction, right, down to the left. And we realized, Sean said, oh, we think we're going in the wrong direction. Pete was like, oh, no, you can go either way. And then took us with Google Maps. He took us all through. We went parks. There was 2 lads, big lads with a lot of tattoos and their tops off, going, all right, lads, did you have any winners?
And you're going, no, I actually didn't.
No, yeah, we honestly didn't. I don't think we would have made it out of that park alive. And then we continued on through some streets that if you walk through those streets, this currency should not be at 133. Good morning. And welcome to everybody. Do we have anybody who doesn't subscribe? Well, I'm sure there's one. Yeah, I see you. I see you, the no subscribe. Go and hit that subscribe button for us. Hit that like button and get those numbers up for us, which will be very much appreciated. Angeline coming in to do a quick
fast markets,
and she's going to take Luke's brain and extract all that information from it.
Right, okay.
Get some ideas.
Prepare for some extraction. Hopefully not as painful as liberation.
We'll see you after the break.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, welcome back. It's myself and Luke Moore on Fast Markets.
Here to be extracted.
Here to be
See?
extracted. And look at the choppy change as well. I mean, like, you know, he
What is
moves
it?
really fast.
What is it? Is this just your angle?
This is my angle, and
your angle.
Rich is used to kind of maneuvering that way. I'm used to my screens this way.
okay.
And so we had Luke jump over.
Yeah.
He was so quick, I could barely see the movement. But speaking of quick, this is Fast Market, so let us go through some of the big movers. Let's take a look at, first of all, the indices looking really risk-off today. Not a surprise, really, after the kind of bounce we saw earlier on in the week. Look at that, your glasses going back on. Some of the biggest movers at the moment, we have already talked about Aviva. I heard you and Rich earlier on, but BP down 4.7% there. Let's have a look at some of the others as well. The Anglos, some of the miners coming back down after they had a bounce earlier on in the week, thanks to Trump and China and that MOU. Drug stocks also seemingly coming back there. Which ones have caught your eye?
For me, I think Boeing's interesting to talk about. And I think Boeing's interesting to talk about because it's basically been, I think it's a little odd. And I was having a good conversation with a client about this yesterday. A company who has been rightfully sold off because their doors are flying off planes and things having to come down, literally, are being put front and center with every single trade deal that's coming through.
Exactly. And also loads, even prior to this and the doors, loads and loads of scandals, mysterious deaths of whistleblowers.
I think what's happening here is Trump has picked, they don't have many big, well, they don't really build many airplanes outside of Boeing in the US, and so he's picked his national champion because he wants to beat Airbus, you know, and it's basically a pick your fighter. But I think just what's quite interesting to talk about is, yes, of course, look, the share price has bounced. You know, it's gone from $130 up to $206. You know, since the start of the year, so it's had an incredible run. Not even since the start of the year. That's the start of April, I believe.
Yep, that is the 7th of April.
Yeah, so we've had a month and a half of just one-way traffic. But again, I'm going to go back to my good pal Perplexity here and just look to try and pick up on the deals that they've done in the last 7 days. So on the 14th of May, $20 million there, 20 million on the 14th of May. Then they get yesterday the biggest defense contract of all time, $96 billion order from Qatar Airways. They've ordered 210 jets, including the 787s, the 777s, and it's just huge. So what's really good here is not only is it a huge win for Boeing, and they're trading as a result, but they're creating 154,000 jobs annually during the production of these. So it's been a big win for Boeing recently. And come hook or crook, they're being supported by the government at this point.
Totally. I mean, this is like, it's close to being underwritten by the Trump administration, right?
Yeah, exactly.
As it is. And also, the moment we saw those headlines about the plane, oh, yes, you can keep it, Mr. President, after, we could almost, bet our last dollar that there was going to be a big deal coming up in the airline space. And here we have it, and defense as well.
I was just going to jump on whilst we are here. If you jump onto the tip ranks for me. Okay, we'll go
here we are, screen. Tip ranks. Do you want to
no, I'm here as well on my screen. If you got it there. Okay, cool. Look, it's 10 out of 10 in terms of its outperformance. So technically, it's seen an incredible run. And the market is supporting that. If we have a quick look at those ratings as well. So fast markets, click on view more for me.
There we are. This side?
Yep.
Cool. There we are.
We've got an average of 207. So these are 12-month price targets. It's had a lot of that recently put in. But they're still, the recent price targets, the recent upgrades are still showing it mostly above where it is trading.
Are you as surprised as I am that the 1.2% upside there isn't bigger a number?
I think on this, because so many of these deals have been announced within literally the last 3 or 4 days, I think research houses probably haven't caught up yet. I mean, you've seen there was a maintenance, UBS yesterday, Gavin Parsons, RBC maintained them 2 days ago. So, this Qatar deal was only announced yesterday. So I wouldn't be surprised if some of these price targets change as a result.
Yeah. So they're probably still behind the curve somewhat. I tell you what, linking this to the news on defense, what I also liked hearing was the fact that Raytheon and also some of the other big defense manufacturers, General Atomics is one of them. We know about all the other big ones, but taking a look at those that create counter drone systems. So I have a drones watch list here, also looking at adding to that, because it is all about how the new warfare is being fought right now. It's all about drones and anti-drones capabilities. Some of them they can actually retrofit onto tanks and planes so that it just takes out any drones that are in the vicinity.
This is it. This is the new way of war, which is why the guy from Palantir has been paraded around as part of this trip. It seems that in front of our very eyes there is I don't want to use the word new world order, but you're certainly seeing a rearranging of powers. Yeah. And Trump has clearly decided that...
It's very clear when he invites them on the trips with him.
Yeah,
so
completely.
Like the
There's a new market in the Middle East.
Yeah, Musk.
But I think he's realised, instead of having to try and impart, the Middle East is its own thing. And he was quite victorious in his speech the other day. He was saying, this is an area that is being built up by local people doing incredibly well, and they become an e-commerce partner as opposed to something we need to impart on. So it's really interesting.
I really did see this as a new era of aviation diplomacy between the US and the Middle East.
Yeah, waka waka. You are right. These Boeing contracts can easily be cancelled. You are right. I mean, I suppose what we're seeing across all of these equity market moves recently, it's pauses to tariff discussions in kind of hope of new deals happening. How much have we actually seen concrete? Very little so far. So you could argue that the entire market is a little bit like that, but we're forward looking. The way these markets, if you're trying to play what you see, the market is telling you that, Boeing seems to be in an uptrend. So.
Yeah, for the moment anyway. RSAC's loving the knowledge as well, because RSAC's keen follower of the defense space, saying that aviation, GE supplies engines to Boeing, and it's take a look at Pratt & Whitney as well. That's another supplier. Of course, Rolls-Royce, I believe, supplies the Dreamliner. Take a look at Palantir as well, because this is an interesting space. We are seeing that breakout there. I drew that back in May, but it is now broken above that, what at that time I was testing as a double top formation, if you like, but that was then negated by that breakthrough. So we are seeing Palantir move high. It has to be said, though, that it is coming from an uptrend that started in April after a correction there. Palantir, your client still very much into that play?
I think people are getting, it's increasingly difficult to buy up at these levels. So I think it's kind of moving into that pot where it becomes a trade as opposed to a buy. The difficult thing is when you get up at these levels, when you break all-time highs, you lose all reference points about where to put stops, about where to put targets. So it becomes a little bit trickier at that point. I think as well, with Palantir, and maybe I've just missed the boat, but I think still people are still fairly kind of unaware of what they do. It's supposed to be AI weapons of the future, drones, systems, but I don't think it's massively clear as to what they actually do.
Well, there's so much more than that. They basically sell AI to any firm that wants to do things quicker, faster. So they're almost like a market leader in making your core efficiencies super fast. So you could bring Palantir to not just defense, but consulting, to banking, everything, and they will just make it super fast. It has AIs that read your systems and create sort of alternative scenarios that you can plan for. So, for example, their systems allow you to say, if we have an attack from Russia, give me the 3 top scenarios and how to defend ourselves.
Right.
If you're a consulting firm, give me the top 3 headwinds, who are our biggest competitors, give me the 3 ways to fight these competitors. See, so it is really a sort of AI core and not just defense. Andrew McKilvey saying Boeing not short of orders before, they just can't make planes to quality.
Yeah.
Maybe Andrew should go there and do the QC.
Well, yeah, but there's a reason why they were getting sold off in the first place. Before this roadshow and before this support, I mean, it was part of the UK trade deal that we were going to buy $10 billion worth of jets. BA were basically forced, I don't want to say forced, we don't know, but it was kind of, you're going to buy these as part of the deal. Yeah, I don't know. I don't know how that one shakes out. How is Airbus trading, actually?
Right.
Let's have a little look at that.
Let's have a look at Airbus for you. Here we are. Right, Airbus is in France down 0.5% there. And also down in Deutschland.
Correlated. I mean, in terms of the price moves, since the start of April, they've both moved higher. So, okay, there's a broader market pickup, but maybe that's less of the Boeing roadshow and maybe just a rebound in the stock market, perhaps.
Right, we got tons more, but I know that our next guest is waiting in the wings, and Luke has a very busy day. We will cover technicals on gold and oil for you, because I know loads of you cover that. I've got sort of price expectations and pivot points as well. So stay for that, because I've got Chris Beecham coming up after this special guest. Stay right there.
See you later.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Welcome back, everybody. So a very special guest I have with me here. It is Miss Philly Panaya. How are you?
Very well, thanks for having me.
Very great to have you on the show. Now, we've this is especially interesting because Philly used to be a wealth manager, is a chartered wealth manager, with background at Accenture, Charles Stanley, and now you've gone out on your own, haven't you?
I have indeed, yes.
So give us an idea of what you've moved into now.
I've moved into financial coaching, so it's that more holistic looking after someone, really getting to the bottom of what they care about, how do they actually want to live, and how can money be a way to achieve that.
Wonderful. And we've got your website up here. So Philly Financial, very catchy. We first started chatting on social media, and then we actually met in person at one of the big events. But you have got your own event coming up now, haven't you? That's advertised on the site there.
Yes, next Tuesday evening for women earning over 100,000, we're going to be doing 3 smart things to do to start feeling more confident with your money and start building wealth.
And when it comes to building wealth, what do you feel that the country is missing, that women in particular have been missing, and that you can help with?
I think it's education. Like, we aren't taught about it at schools. When you start your first job, no one tells you sort of what to look at in your pay slip. You're put into a default amount for your pension. Pension's far off. But all these small things, actually, if you make some tweaks in your 20s, even in your 30s, you're just set up so much better. So it's about kind of helping people also turn from high salary to actually then building wealth with it. I think it's really important to know what you want to be saving for, know what you want to be investing for, actually just getting confident that investing is for you.
And when you speak to all these women, what do you feel is the main barrier as opposed to the conversations that you've had with men through work in the past?
So I don't think it's about being risk averse. I think they're risk aware, but if no one's spoken to them, and I found when I started 2011 in Charles Stanley, I was the only woman on a grad scheme. All our clients would, typically the men would come in, or if the wives came in, no one was really talking to the wives. And actually, they often were the ones with the P&L at work. They were running budgets. They had knowledge, but it wasn't really being taught or aimed at them. So I think it's that sort of involving them in the conversation. It isn't just something for men. It's just really that first key thing. I also help a lot of people where they're the first generation to be earning money, men and women. And actually, if no one's talking about it at home, and now you're quite senior at work, it's quite embarrassing to say what's nicer. If you're an MD, it's embarrassing.
And if your parents, haven't had the excess income, which has allowed them to save and invest. I know my mother and father were very lucky. We had an incredible next door neighbour, Mr. Miller, and when he passed away, he left my mother some shares, and that was where a lot of our first investments came from.
Amazing.
That led me to then take an interest as well, because my dad used to teach me what these certificates were that we would get. Show my age here, but the sort of necessity to just get used to the language at a young age.
Absolutely.
And it's just been missing, hasn't it?
Totally. And I think when I started in 2011, it actually took me 3 years to start investing my own money. And I was investing for people, millions. So the fact that I thought you needed that high amount, when I was at Rothschild doing an internship, you needed 5 million as the minimum. Charles Stanley, it was like 150,000, but these were higher numbers when you're on a grad salary. I still thought that wasn't for me. So the fact that it took me as an investment manager 3 years, and I think now with the democratization of investing, in fact, you don't have those high dealing costs. You can start with a small amount. All these things just are adding up to help people.
That's been a huge change, hasn't it? I mentor a university student up in Edinburgh called Rory. Big shout out to you, Rory. And he's got into investing, and he is literally buying £12 of Apple, or £15 of, well, he goes, a little bit more risky sometimes. Yeah. But it's this democratization, it's changed everything, and it's 7-8 years. Do you think that's been around?
Yeah, I think so. Yeah, so I started in 2011, but it took me a few years to actually get going. Yeah.
And what did that first investment journey look like?
Well, it was actually great. I think I got in at Fever Tree at about £11, and everyone else had bought it at £7. So I thought, have I missed the boat? And it went up to £40.
£3.
Oh, right, £3. Okay, great. But, it started lower than I went in. I thought, dipping my toe in. Yeah. And it was like, that was a great first.
It's actually one of the big examples I use, because my friend, actually Piers, who comes into the show every now and again, took me into the Ivy on Kings Road, and he said, right, I'm going to buy you 2 gins, and one I'm going to put, normal in, and this other one I'm going to put this Fever Tree drink in. Can you taste the difference? Yeah. And I was absolutely amazed, and that was just after Fever Tree IPO'd. Yeah. But it's that thing that people don't even know they're doing research at that point, when they're out eating, when they're in JD Sports, when they're, having a gin and tonic.
Absolutely.
So,
we used to get all the people getting the coupons, if they were Marston's shareholders or the different F&B companies, always keeping the back office busy, sending out coupon booklets.
That's right. Because we would get a 10% discount off car insurance with Aviva.
Okay, great.
Because my mum was a shareholder. So what do you think the sort of the next step is, when it comes to your business and the people you're seeing? Yeah. Where would you like to be in 3 years?
Well, I think it's the community aspect of it that I really like and people really value, seeing women like them often kind of going up the rungs in a company, and it's typical, quite hard sometimes to retain women as it gets more senior, maybe if they have children, maybe, there's often, it's nothing to do with the women and their ambition, but I think there can be a slight difficult time. And so actually to find other women who are going through sort of similar, situations at home, at work, to then have this community. I really like the fact that I'm building a community. And seeing people really getting clear on what they want, their values, their vision, and then sort of investing towards that, and being purposeful with their time as well. Like the sort of cumulative effect, not just from the money point of view, but how they're living, I think is really special.
Because a lot of companies have women's networks, and we've got a fantastic one here at IG. Luke Moore was actually one of the panel guests for the Women's Network.
That's fine. Allies, very welcome. Yeah, we need men, to actually champion this. Yeah.
That's it. We all went to champion everybody else on the panel, apart from Luke, and gave him some tough questions. Right. But yeah, so there's a lot of women's networks within corporate, but what you're talking about is more external.
Yeah, and I also work with a lot of amazing female founders from businesses where I do see a different mindset. So part of what I do is about money mindset. I see sometimes there's the safer element of, going up the rungs, getting a higher salary, saving money as cash. Right. And then with some business owners where the abundant mindset is there, they just have a problem, I'll get more revenue. So they go from I need, from 300,000 revenue to 500,000 revenue in a year. These amazing, they see a problem, I need revenue, they go and get it. And so I see a very different sort of abundant versus sort of maybe slightly more scarcity mindset. I need to keep my money safe. cash,
Squirrel
things
it,
I
squirrel it
know. Whereas, and it doesn't mean that those people are investing in the stock market yet, but I do see, and I love it. I love the difference in those two types. Because obviously not all women are the same. We've all got different things going on.
Yeah.
But in terms of the two types, that sort of entrepreneur, maybe has an HMRC bill outstanding because the details aren't there with the money. But again, that's like we're not taught. No. When you get your limited company, you're paying yourself. Is it salary and dividends? Like all these things. It's what are you putting into your pension? All these are parts of the personal finance which we're not taught.
No.
Whether you're an employee or a business owner.
So is it something natural in those, high achievers or entrepreneurs that you notice, or is it something they've learned along the way?
So I think because our money stories are formed before the age of 7, let that sink in, before the age of 7, that the people who go off often to be entrepreneurs, if you ever listen to Desert Island Disc, which I love, you listen, all these stories, often it's come out of hardship or something, tragic's happened and they turn their life around. And often I think that sort of striving to get away from what it might not be thought through, but I think it's subconscious that there's a need to, I'm going to get out of whatever my situation is and create a new, life. And often for them, that's sort of starts with money. After that, they can think of what else do they want to do with the money. But we've got so many successful people in the UK who've just got out of where they've started from, and I think that will partly be down to money mindset and how you've basically been formed, your foundation as a child.
Yeah, it takes me back to a Friday night. I would get shipped off to my gran and granddad's to give my mum and dad date night.
That's nice.
And but my granddad was he enjoyed the sport of horse racing very much.
Good.
But on a Friday night we would sit and we'd play cards for coppers.
Okay,
1 pence, 2 pence, maybe even a 5 pence piece.
Oh, silver.
If we wanted to go big.
Yeah.
So that was a lot about rummy and pontoon and working out probabilities and risk management.
Yes.
Saturday, he would take me to the bookies and we'd look at the horses and I'd get used to odds in my mind and he would teach me that. This is at 5 years old.
Amazing.
And then Saturday night, we'd play Monopoly. So it was, I didn't realize it at the time, but everything was about risk management, probabilities, and that is why my brain's wired the way it is, as you say, 7 years old.
Brilliant, that's so good. I was listening to a podcast yesterday talking about how we're looking at, risk ratings. Wealth managers always have to now look at the risk level of portfolios, and it was talking about backward-looking volatility. And actually, as things are changing now, is it going to be able to look forward? How are we going to price things in? I thought it was quite interesting.
With artificial intelligence.
Yeah. Wow.
God, that would be really interesting. So predictive.
Predictive. I mean, because I always used to say, we'd set up a portfolio for someone, and it would have, concentration is clearly has an impact on a portfolio if you've got a really large holding. But previous performance, something can happen that you can't predict, and it's. Well, hopefully you can predict now with AI, but there will be certain events that would really change a share price, and actually, because it's been steady over the years, that wouldn't reflect in the risk rating.
No, but it was the same when we had VAR, so value at risk models in Credit Suisse. Then, because of 2009, 2010, it blows up the VAR hugely. But as soon as you get to 2015,
you're out of that range. Yeah,
and everything changed. So suddenly. Yeah. January 2015, you could take a lot of risk, and December 2014, you couldn't. It's just
doesn't make sense.
No.
Yeah.
No. Now you had a wonderful interview. Was it last week with Claire Barrett?
Oh yeah, in the FT. Yeah.
How did that go? What kind of questions? Because we actually spoke about her article this morning on ISAs.
Oh yeah.
And about the potential for Rachel Reeves to move to lower cash ISAs.
Which I think is a terrible idea. I don't know who they're consulting. But because basically in all the work I see, people aren't not investing because they're choosing the cash ISA. People are using a cash ISA as a savings vehicle. This is just going to get money into savings accounts.
Yeah.
And it's because people don't feel comfortable investing, or they don't know where to start with investing. So it's not to do with the fact that they can't, and also most people can't put 20,000 into an ISA. in the UK. So, you know, you've really got to have quite a high disposable income to be putting aside 20,000. And even the people I'm working with who are earning over 100,000, you know, they're not all putting 20,000 into the ISA. So you're really on a small part of the of society anyway. But Claire Barrett, I went to speak to about the 60% tax trap, where when you earn over 100,000, you start losing your personal allowance, and it's doubly compounded by the fact that you also then lose your funded childcare hours, which is about £7,500.
So it impacts those with children a lot more.
Yes, and the Institute for Fiscal Studies did a new bit of research that you basically needed to be earning almost 150,000 to negate the impact. So it was better to be on 99,999 than all the way up to I think it was like 145.
Yeah.
So a huge amount. And when the lifetime pensions allowance was scrapped, that was because a lot of people in the medical professions stopped working, they retired early.
Right.
So we're hoping that because we've been seeing GPs and other medical professionals stopping, reducing down hours so they can still qualify for the funded, like you don't want your GP just working 3 days a week so they can get the funded hours. Doesn't help anyone.
No.
So we're hoping that it will have a similar impact, this article. It's been one of the most read articles I think they've had.
Right. Excellent. Thank you so much for coming in, Philly. This has been, you know, really eye-opening. And is there any questions that people would like to ask before we go? And we see we've got Neil Invests on the chat there. He's another one of our Finfluencer crew, and Tom as well. Top of the morning to all of you. Waka Waka said that he's got loads of Tesco certificates from back in 2001, 2006. I've got a Guinness share certificate sitting outside on the desk there.
We used to have people wheeling in with suitcases, or when they died. So we'd always say, try and do it before you die. When you then have to do all the sort of, it's a admin hassle.
That's really tricky. But thankfully all that problem's done with stockbrokers. Now, as we look, you know, the kind of carnage that's taken place over the last month, have you found that that's hit people's confidence a little bit? Has that come up in conversations?
Yes, and actually, I think some people have been asking, is this the time to invest? You know, when you see things are down a bit, is this as low as it's going? But I would say definitely, because when you know, headlines sensationalise things, and when you see a sea of red, and you know, it does send messages to people's brain that this isn't safe, and you know, high movements is stressful for people, and they think that could be my money that I've carefully saved. You know, you understand it. But that's where not investing is equal. You know, you've got diversification, and actually when you see individual stocks that, you know, up and down, that's not very helpful. Obviously the S&P 500, you know, when that had the tariff chat and that took a dive, you know, that is where it is actually something we would have said was fairly diversified, although not global. So I can see why it has worried some people.
Yeah. And then on the other end of the scale, the risk appetite.
Yeah.
Do you have people talking about crypto and interested?
Yeah,
right?
interested. I was chatting to someone the other day who's 50% crypto, 50% cash.
Wow.
Very wealthy person. You know, it's interesting to see.
Right.
And I think
it's a barbell strategy, I think.
Yeah, it is interesting, and you know, the sort of the model of 80% sensible, 20% core, you know, the core satellite model. It's interesting seeing different people's weightings of where I don't advise now. You know, I'm not advising, but happily talk through with people what their strategy wants to be, often linked into their, you know, goals, risk level, time horizon, all these things which are very important. Definitely seeing different strategies, and it's interesting where things will go. I also think with how people still in these default pension funds in our lifetime, I hope that will change with the sort of moving to bonds and cash years out of the retirement age. You know, we're all living so much longer, and although I get plenty of TikTok comments saying I might not even live to retirement, I mean, it's such a small portion of people who don't. Well,
my father passed away at 59.
Okay.
So for about 10 years, that really put me against the idea of pensions.
Which is understandable. Yeah.
But I'm coming round to it now. Now, you mentioned your TikTok there. There we have it on screen. How do people find you?
So at This Is Philly Financial on TikTok, and phillyfinancial.co.uk is my website.
Excellent. Philly, thank you so much, and we'd love to have you back soon. Any shout outs you want to give to the family?
I don't know if they'll watch. Thank you.
Good stuff. We'll see you after the break, people.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, welcome back, trader friends. And we are about to hit all sessions right now. We had that amazing interview earlier with Philly talking about the finance and also why lots and lots of people have to get onto the stocks and shares. Let's have a look at the markets now, taking a look at the overall markets. If I can zoom in on my chart there, if I may, and just taking some of the stocks there that we saw higher early in the week taking a hit there. It is certainly a risk-off mood that we are seeing across the board here. Some taking off of the froth there. Germany 40 down 0.3%. 1 minute to go to that all sessions open. The FTSE is pretty much flat there. US Tech 100, Wall Street and US 500 down slightly there. In terms of where the biggest movers are, European shares falling because the energy sector is weighing on this. How many more seconds have we got to go, people? I'm going to get my all sessions chart ready for you. Here is my checklist, all ready to go. Let me know when we can press the button there. But as I said earlier, everyone now waiting on JP, who's about to talk later today, amid a raft of economic data that we are counting down to at around 1:30 our time. They include PPI. We've also got retail sales coming. 9 more seconds to all sessions, and here we go. Right, and we are off to the races, trader friends. United Health Monkey Man. I hope you came off that trade yesterday when I said it was turning. I did message you. Clean Spark down more than 2% there. JD.com also down almost 3%. Taking a look at the rest of the downside chart there, we got Beyond Meat also down. Nvidia down more than 1%. Off to the winner's circle. Briefly, if I may, Tilray up 4.2%. Anyone trade cannabis-related stocks? Do let me know here. Moderna also up almost 1%. They're Boeing. Also up there after that deal that we talked a great deal about with Luke earlier on, that deal with Qatar up almost 1% there. Ocugen also up 0.75%. Drug stocks and also some of the consumer-related names, Procter and Gamble up about 0.5% there. Procter & Gamble up 0.5%. Just taking a look at Walmart as well, because Walmart is expected to update with numbers, and just trying to get my chart to obey there. Maybe if I just search on the right-hand side, that might be easier. Here we are, Walmart, all sessions, and it is up 0.4%. Those of you that trade retail stocks, of course, we've got Walmart results being watched. We also have, as I mentioned earlier, those retail sales and the PPI as well, alongside that speech JP is going to talk. Perhaps he might say something about inflation after we had that softer number a couple of sessions ago. Maybe we might get further direction to pounce on any. I'm looking for any change in music as to whether or not he still says that double D sentence, so data dependent. In terms of Europe, we have had a cracking earnings season so far. We've had lots of releases from companies like Siemens, of course, Deutsche Telekom, ThyssenKrupp as well. Let's have a look and to see across that space what is going on. Taking a look at Siemens first, and Siemens down 2.5% there. Aviva, also one that we are watching for you. Aviva, I know some of you like the stock. Andrew McKilvey and some others mentioned earlier, it is. Look at that upward trajectory, that upward trend there. I've drawn that with my trend line. It is ticking high, but we did then see this drop off when it hit that resistance point around 588. Taking a look elsewhere in the commodities space, oil and gold being weighed on today. Oil, WTI down about 3%, trader friends, 3% there. This is as we have had weakness in terms of demand, but also the IEA. This is just crossed as we speak. The IEA forecasting global oil demand growth will slow to 650,000 barrels per day for the remainder of 2025. That's right. Demand growth will slow to 650,000 barrels. This is quite key because we already had mood music out of the Saudis reportedly saying they're okay with oil prices staying low for longer. Now demand growth is looking, they revised that lower as well. ThyssenKrupp, let's have a look at that. ThyssenKrupp is one of the movers, and it's down 10.6%. ThyssenKrupp, this is actually not as bad as earlier. Let me show you the 10-minute chart here, because it has, come back slightly. This is the 10-minute chart. People hear me talking about drilling down in terms of time frames. So I look at weekly and then daily and then the 10-minute, because that kind of gives you a clear idea of there any turns in play or about to happen, like United Health yesterday. ThyssenKrupp right now giving us that a bit of a retracement there, but still down some 10% after falling an earlier 12%, after falling as much as 12%, shall I add, after the submarines to car parts group reported a fall in its Q2 operating profit. Right, we'll have more for you in just a moment. We've got Chris Beecham just waiting in the wings to come in and join me with all the movers that he's watching, so stay right where you are.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, welcome back. And we have Chris Beecham. My fond nickname for Chris is Speechy Head. And he joins us right now. Chris, of course, we're watching Aviva. I saved that specifically for you because you were talking about that.
Oh, you're
this
so
morning.
kind. I always have a love-hate relationship with insurance updates because they're so tortuous to read. They're not ones that make themselves easy for investors to get to grips with, are they? Really?
Just go down to the penultimate paragraph. You know.
Well, I know, but
RNS.
there's always a surprise, isn't there? Within.
Yeah, that's why you go straight down to the penultimate
'cause
paragraph.
It's buried, isn't it?
That's what I mean. It's buried in the last penultimate
Well,
paragraph.
no, it might even be somewhere in the middle. They like to catch you up. My rule with RNSs is that the more fluff they have at the beginning of the RNS, the worse the performance has been. So if you get an RNS that starts with the numbers and says, it was okay, we did all right, blah, 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 it's all fine. If you get one that says, we had a lovely year, we went on holiday, we've had a lovely team building day, that's your massive sign that something is up.
Yeah.
And the more corporate guff at the start of an RNS, the more worried you should be.
Yeah, because the bigger the but.
Oh, yes, always, it's like any sentence, isn't it? Always wait for the but in the sentence. Anything before the but is irrelevant, and that's exactly what you get with insurers. But overall, with Aviva, not a bad set of numbers, really. I mean, in line with forecasts. And of course, this is the key thing with Aviva. It's your dividend payer. It's so important at this point in time. In fact, it's a bit of a morning for dividend-paying stock, really, with that National Grid. But Aviva giving you that chunky 6.3, 6.3% dividend yield. A very, very strong performance so far this year, really, and one that was very immune from the volatility in April. We had a bit of volatility mid-March with the whole competition probe, but very, very solid. Up 20% so far this year for an insurer. It's really
quite remarkable
performance. And going even further back, this is trading about £4.20 back in February 2024. So it's a very, very solid period. It has to be said that it's one for the patient because you had it hitting what £5 a share back in April of last year, and then it didn't really go anywhere for the rest of the year.
No.
So, it went into hibernation, as you might expect with Aviva. So after the surge, it's not really surprising to see it just easing off this morning, I think. But it still puts you in, I think, a very good place in terms of further growth. And the acquisition of Direct Line continues to be, given the AOK, really.
It almost touched 6 at one point. Almost.
Yes, very, very impressive performance.
Let's have a look back. Weekly.
It's just delivering for you in so many ways. I think it's a really, really, really strong sign from one of these solid dividend payers.
And also, I mean, so unloved, and right now, that dividend, and in uncertain times, this one I think deserves a second look in. Also, they're saying that they are confident of meeting their 2026 outlook. Trader friends, if you have Aviva on your books, please let us know, because I know quite a few of you do. In fact, one of you highlighted it to me in the chat, and I am adding it to my stocks and shares ISA this year. It expects to remain active as well in the pension insurance deals, talking about that. And wealth business, this recorded net flows of £2.3 billion.
And it's such a turnaround from what it was trading at £2 a share back in May 2020. Obviously, COVID had that impact, but very, very solid recovery. And I was just looking up using one of my favourite functions on the Reuters platform, the total return function. See what you get with the dividend included. 30% a year over the past 5 years from a boring insurance company, with all due respect to Aviva, but a very, very well managed insurance company. But the key thing is, if you're looking at the monthly chart, looking at this long-term view, we are right back at these 2015 highs, these pre-Brexit highs on Aviva. So even if you're not a chartist, even if you're not the kind of person that spends time drawing lines on charts and you're just looking at the fundamentals and the long-term move, you've just got to keep an eye on that one. At these current levels. This is, of course, Axel will tell you this better than I could, but it's that less map charting is not that it's telling you what's going to happen next, but it's just saying, okay, this was important before and it might be important again. And this, you can't get a clearer message than that, saying, look, £5.70 was the high at the beginning of 2015, and we know what happened next with UK stocks over the next 2 years. They weren't the greatest place to be, but it's just saying that it might struggle around these levels. So it wouldn't be surprising, particularly after that straight line move in April. So many stocks have just done that all the way through the past month. That they are, whichever company it is, they are pricing in an awful lot of good news at these levels. And so you just think, well, maybe it needs to have some consolidation in the short term. So not a bad set of numbers, not a bad share price response.
And also maybe this is just, taking some of the froth off there.
Yes, I do like that word, froth. It's a key thing in markets. They just get frothy. And I think after that, whatever percentage of move that is for Aviva in April, somebody quicker than me can tell me.
One I do have key lines on is gold, given we're now, at least in this session, seeing a bit of cooling of that euphoria that we saw earlier on in the week.
Yeah, and a key lesson here is that nothing ever goes up in a straight line forever, apart from Nvidia, obviously.
But it has had a correction recently.
Except when it doesn't, but it mostly does the same thing. But gold, again, it's just looking at sort of however you value gold. If you look at it sort of on a ratio to equities, if you look at it on a ratio to silver, if you simply look at it as your, not even an inflation hedge, but your uncertainty hedge right now, it was bound to suffer in the short term, particularly with this tariff truce, I think is the way it's sort of being spinned, being spun,
yes.
Wrong past tense, spun. 3,400, it's just dropping through 3,200 yesterday for the first time in a month, although look at where it's come from this year. Again, if you're looking at short-term levels, the early April high was 3,150, so we're just right on that as we speak. So maybe some kind of consolidation. But markets, you kind of think of them almost in human terms of you can't keep going at the same pace indefinitely. You have to have a breather. You have to have consolidation. And that's probably what you get here in gold.
Yeah, and talking to my chart here with gold, you'll see that I've put 3,135 there, trader friends. And I'm looking for either a bounce or a break below. And if we break below this figure, then we could move potentially towards that next level, which is 2,967 there. If we bounce off that resistance point, you know, we're at a very key area right now. If we bounce off that key resistance point, then we maybe could go back to potentially highs seen last week. But it remains to be seen yet, because I want to see a confirmed close either below or above that, because I'm very much the safer but later crowd.
Yeah, and that's sort of the key area, 2950, 2960, because that's the low from early April, and it's also crucially the highs from late February. So a nice confluence of support and resistance.
Oh, I
there
love
is
that
always
word,
good.
confluence.
Yes, and you don't.
Technicians like confluence.
Yeah, they do, and you don't have to be a MSTA to sort of just say that was an important level, both on the upside and then in early April. For whatever reason it was, there was buying in early April at those levels. We know what the fundamental reason was, because all hell broke loose. And so we'll see whether it gets there again. It might not even get there, that's the key thing. And 3,000, as they like to say, a psychologically important level, which basically means it's got a lot of round numbers attached to it. And it's a bit like thinking of a century in cricket. It's just one extra run from 99, but it's always the, well, can you get to 100 runs? So that's what we're dealing with in gold at the moment.
And the easy to remember numbers as well, right?
Yeah.
So for gold, those of you trading gold today, just bear in mind that we have a huge number of economic numbers coming out today as well.
It's quite a busy day.
It is a busy day I feel like we've had, every week's been busy, and each time we think it's going to quieten down, it doesn't.
One thing after another at the moment.
Got JP, of course.
Of course, yes.
Speaking later on today as well. Hopefully we'll get clear ideas from JP, whether it's still, you know, data dependent, or...
well, what's this? Opening remarks at the second Thomas Laubach research conference in Washington. So it's not supposed to be a big thing, but you have to wonder whether they might get some reference. Because, of course, you've had CPI since the last time the Fed met. You've got PPI today. So there might be a passing reference from the Fed. But, yes, I think it's very much data dependent. We wait to see where we go.
Yeah.
Here. Thankfully, the sort of Trump-Powell spat about needing to cut rates now has eased off for the time being, because hopefully somebody has said to the president, look, if you want him to do this, you have to stop talking about it.
And also the spat between, you know, you're a major loser. Wasn't that the term that was used?
Yes, exactly. I mean, it's not the most... It doesn't project confidence, does it, when you have this public argument?
Just whacking up the CME Fed Watch screen for everyone here. You know, what's also key to understand is that it does start getting quite exciting as we get further into the summer, or towards the summer. Market's still looking at 50 basis points of rate cuts this year. However, this, you know, easing of the US-China trade tensions, you know, might change the rate cut trajectory somehow. It has certainly dented, you know, gold's appeal for now as a safe haven. We talked about that earlier. Also, the dollar, another key one that we watch here for you, because we know that there are a lot of traders out there who trade not just the dollar basket, but these crosses. Let's take a look at euro dollar there. Because there is this, you tell me which side of the camp you sit on, Chris, because there is a thought that actually the weaker dollar for this year, that actually essentially might change if we suddenly see the tariff mood music all start to ease, you know.
Yes, you get a sense that, but look at the positioning data from the Bank of America fund manager data in a week. Everyone, but they're massively underweight the US dollar, the biggest since 2006, I think it was. So just fund managers have been getting out of the dollar at any cost, really, because of just the policy uncertainty in the US. So you kind of think that even though you can make a case for why the dollar should continue to weaken because of that, at the moment everyone seems to be the wrong side of the trade. And if the dollar continues to strengthen, you might then get an unseemly rush back into it, because we're back down on the dollar basket, back down at 100. Look at euro dollar. You've got scope there, I think, for a bit of a further reversal if people want to continue buying the dollar, because there'll just be that natural flow back into US assets, having panicked out of them a month ago.
Yeah. and even further back than that, actually, which has helped the euro. Speaking of which out of the data points today, to you will be the most market moving? PPI?
Well, I think it's PPI, yes, because there's that sort of sense that PPI is your sneak peek into what's coming next month in CPI. Do you get any kind of reaction from tariffs already in those numbers? Because admittedly, CPI, although it was for April, didn't really show any kind of front loading of tariff. Maybe companies in the US are absorbing the tariff costs already, that they're just taking the hit. Maybe there just wasn't enough time to make any changes from April 2nd to April 9th to actually do anything, because by the time he reacted, he decided to pause the tariff. So another softer reading there, and you get a sense that just piles on the pressure on the Fed to move. In fact, if you look at, I don't know whether you can see, can I share my screen? I've put it in.
There we are.
This is from Nick Timireos at the Wall Street Journal, but it's showing you core CPI annualized over the last sort of 3 months, 6 months, 12 months. They're all heading downwards. So they're all lower than the Fed's current policy rate. So you can understand why the White House looks at that and says, you cut by 50 basis points in September last year, and yet you don't want to do it now when inflation's even lower than it was then and employment remains relatively steady and we've just paused the trade wars. Why wouldn't you cut rates? It's hard not to see Trump's point at the moment that the Fed might not be as entirely neutral as he'd like it to be.
Yeah.
But then to your point, no, central bankers, we said this earlier in the week, I said this to Reuters, they're like teenagers. The more you try and make them do something,
The more they stand.
the less likely
Yeah.
they're going to do it. So he has to just not mention it and hope that Powell does it. It's a far cry from, was it Lyndon Johnson, the president, used to summon his Fed chair down to Texas, and he once picked him up by the lapels and held him up against the wall.
Oh, I didn't know he held him against the wall.
Yeah, he literally just picked him up and held him and said, "The American consumers are suffering and you're not cutting rates." And I think he was a bit more direct in his phrasing than that. He's not likely to do that, but that's the kind of world of central banking that used to exist before the great moderation and independent central banks came in.
What US consumers are getting is cheaper oil.
Yes.
And cheaper eggs. I'm getting
Well, yes, egg prices.
so many messages
They
from my
don't have to
cousins
shell out
across.
so much for eggs anymore.
You can always count on Chris Beecham for a pun
We
of
did
the
all our egg jokes this week, so I'm still from my egg joke albumin. So there we
Oh
go.
my goodness.
But yes,
oil.
lower oil
Look,
prices.
Down almost 2.8%. Is that right? Yeah. You know,
Well, this is
lower.
big news in the world of global diplomacy, and US, Iran, not the best of friends of the past 50 years. The Iranians to finally say, look, we're prepared to not continue enrichment at high levels to make nuclear weapons. We'll just carry on at lower levels if you lift sanctions and allow in inspectors. That is almost everything the US seems to want. I think it does show that the change in the Iranian position over the last, well, certainly over the last decade, if not over the past couple of years, because suddenly a lot of the underpinnings of supposedly, you know, that they're supposed to be the major power in the Middle East outside of Israel, and yet they're much weaker now than they have been for the last decade. And so they almost have to come to the table. So yes, oil prices, Iran was the 7th largest, I think Luke was talking about this morning, 7th largest oil producer last year globally. So there's the potential for more weakness there in oil prices. You've had that bounce.
Yep.
And that's caught people offside, I think. But again, and if you a strengthening dollar, of course, will also put further pressure on it. So to watch for some short-term weakness in oil prices. We'll see where we go.
And Trump on CBS News said, telling MBS, I like you too much. Did you see that one?
No, I didn't. I haven't caught all the highlights. There's so many. I thought I nearly fell asleep in the press conference.
It was quite long about CBS. If you're looking on Google, Trader Friends, there is a... And I have worked in the Middle East before, both in Dubai and Abu Dhabi, been to Jordan twice. This is very much the way they translate the, you know, I like you a lot. They say, I like you too much. It's a direct translation, but I love it. I absolutely, Yani, I love Arabic. But speaking of which, we always give you added value here at IG. So taking a look at my chart there, you'll see that I have drawn what appears to be the start of a wedge there. Failure to break resistance around 66. This is WTI here. I never look at Brent, always comfortable with WTI. Don't ask me why. It's just something you get used to. If we break resistance around 66, this will suggest the completion of this wedge formation here.
It's certainly the much more popular product, WTI, over Brent, if you look at the trading data. So it's the one we tend to look at anyway.
It's more sensitive, I think, to, you know, Middle East announcements, Trump tweets, and just
Certainly.
behaves as you expect it to behave. You know, Brent's a bit laggy.
Yeah, I think it's more staid, it's more British, shall we say, whereas WTI is more US and frenetic. I think it probably captures that quite nicely. But yes, hit that wall about 63.20 this week. We'll see. Looking at a chart like that, your temptation is to say, well, it will keep going down from here. And it wouldn't be an unreasonable assumption to make. Certainly, you've got a possible just eking out that lower high there compared to April. So we'll watch to see if that does drop down towards, what was it, 56 was the May low. You had a very swift move late April, didn't you, towards 56?
Yeah, it was, around...
Which is a big level, big level, because it's that 9th April low from the infamous tariff pause day. So that's your initial target if it does roll over from here. Certainly the move, obviously, from January has been sell the rallies in crude oil, which is really impressive because you suddenly thought it was due a longer term bounce, and it's just not been able to hold these gains all the way through. So the direction of travel seems to be lower.
Someone in our chat said 40 by year end, and
great for inflation.
yeah.
Good for consumers.
Speaking of which, Bigger Beers loving your pun earlier today. Bigger Beers saying eggs bounce and are going up again. Hopefully not in
bounce
prices.
eggs because then they smash, can you?
Don't know what eggs you have, Bigger Beers, but yeah, mine will not bounce. Bigger Beers also saying used to live in JOD. Is that Jordan?
You're the global flyer.
They have a crazy airport in Jordan. It's the smallest airport ever. I felt as if I was about to walk through and then no one checked my passport at one point. It was very disturbing, very disturbing.
You are IG's answer to Michael Putter. We need to get you some bright coloured jackets.
Yeah.
Airports I have known.
Steve Davis saying, I'm holding Aviva. Let's hope it keeps going. Me too, Steve. Me too. Andrew McKelvey saying, I have Aviva and DLG. And the last time I checked, buying DLG is a cheap way to acquire Aviva, assuming deal completes. That is interesting. We had a question earlier on as well from Andrew McKelvey saying, and guys, you want to scroll that down slightly to see that question? You were saying something. Someone asked me, can you elaborate? Oh, RK. Ange, could you elaborate on how you figured that United Health was turning yesterday, please? Well, it's very simple. Monkey Man was trading United Health yesterday. And I was on the case as well after he alerted me to it. He bought... Where did you buy again, Monkey Man? Let me know.
Brave
this is
if
the
you did.
one.
Look at
He
that
was
move. I mean,
brave. He was very brave.
Halved in a
One
month.
chart.
It's ridiculous.
Let's take a look at that. I believe Monkey Man had bought low, caught it on the way up. Then I alerted him to it turning and coming down, and it was purely, Jake, because I was looking at the chart at that point and volumes were starting to move higher. And as you can see here, it is moving much lower. We did talk about this in the chat because we had a school of thought that, you know, this chart had great promise of rebounding. They said, you know, it's got, yes, but then many others on the chat,
scalpel, if ever there was one, look at it.
yeah, including myself, said, you know, all these scandals, you know, a lawsuit, right? So, yeah,
Does that hold
unresolved.
for US stocks as well? You know, in the UK, we say bad news comes in threes, don't we? Does it think that holds for US
Like
stocks?
buses.
Well, yes, you always wait for 3 profit warnings, but this is always that lesson about diversification. If United Health only went one way for years and years, and if you put all your money in it, you've done fantastically well, and then suddenly it's just halved in a month because suddenly just lose the plot in a way. And this is exactly what's happened to United Health. And then you get the news about the scandal with which I should note, of course, the company is, I think, denied the Wall Street Journal report overnight that it was facing further investigations. But grim performance here. All the gains since September 2020 gone.
Yep.
Absolutely grim.
There you go, Monkey Man saying he got in at 312.
Okay.
312.5 there. Oof.
It's brutal. It's really
I
brutal.
hope you unwound, Monkey Man, when I told you that was turning. So, yeah, literally I was watching it and I pinged off a message to Monkey Man who got it. I hope you acted on it. hopefully. Bigger beers, there were 10 million in puts bought at the close yesterday. Someone knew. Someone knew. That wasn't me. Just to put that out there. I just
You're
saw
not
it.
on the White House signal chat?
Well, apparently the White House has stopped the usual suspects from coming to press conferences now.
Oh, really?
Yes. So because they upset several people in the White House. So last I heard a month ago, Reuters and AP were told to stand outside.
Yes, it's incredible. And Zero Hedge was allowed in as well.
Yes, I heard that. Yes, until things change again. Question for Chris in the chat. Genghis Khan. Never thought I ever have to say that, but Genghis Khan in the chat saying, could you please ask Chris Beecham for his thoughts on the recent rally? What factors could stop it or help it continue further?
Obviously, it's the truth. It's the fact that
US 500. I'm pulling that up right now.
investors were so. I think we had this. Everyone piled out stocks in March and particularly in April. And so, if you look at again the fund manager survey for April and May shows you that people still don't like US markets. They're still underweight relative to where they were. So I think what you get in the short term is more of a grind higher, really, because there's still this drumbeat of, oh, there'll be a recession and stocks will drop again, which is fair enough. I think it's understandable. People think, well, all the bad news is yet to show up in the data, so we could fall again. But at the moment, I think you've got a continued grind to the upside. Inflation is not responding. The longer this rally goes on, the more fund managers will have to get back in again because of the need to rebalance and the need to chase performance. So that is a key element here. We've gone from a short covering rally, all rallies begin with short covering, to a more sustained sort of fundamentals driven outlook because suddenly the nightmare vision we had in early April of tariffs and global recession, goodness knows what, has eased off. Now, of course, those tariffs are paused, so it could come back again. But it just sort of sends a message that you've got Besant in charge. There's a more conciliatory approach in the administration, I think is the way to put it. And therefore, you will perhaps get more progress on trade deals that will moderate the impact of these tariffs. And of course, 10% tariffs on everybody apart from China is still much higher than anybody was thinking of in recent years, ever. And so, in one sense, that will take a hit to earnings. But the questions we have to ask ourselves now are twofold. One is, did we price in enough bad news with the April drop that we can then get through the next earnings season and say, okay, it's not as strong as expected, but it was okay? And the second one is, or are we now pricing in too much good news because of the huge bounce? That's two ways here. But look at that chart.
Yeah,
look at
I'm
the
just
way
showing up. This is from Bank of America Global Research.
The way this underweight, overweight. So overweight, you've got more in your portfolio. Underweight is less. And understandably, people have said, I'd rather not touch US stocks with a barge pole while the administration is convinced about trying to break the global trading system. Now, if you look at those levels when they get to, well, even at slightly less extreme levels than they were, so back in 2002 and then 2017 and 2023, what happened to stocks after those readings? Answer, particularly in the US, they went up quite a lot. It's fair to say. So that's the idea, that you get this buying pressure of
Chart
fund
down,
flows
guys.
that will just continue to drive US markets higher. Maybe you don't get in the short term another big drop. This is the thing. A lot of people will be saying, well, I wish I bought the dip. Well, understandably, people didn't because of the fear. So you don't have to go all in at this point, but you could maybe sort of drip feed back in again. Of course, if you're dollar cost averaging and pound cost averaging every month, you've probably missed all the volatility anyway, so you feel much better than you would have done.
Do you ever use Endow Us as well? This is a really cool kind of like snapshot to kind of have a look at where fund managers are putting their money to work. And I'm just going to slap up one of the latest, and it's called Top 3 Concerns for 2025.
Okay.
But this is back in December. I'm just showing this to you because I'm going to come to the point after that. You see, public market equities, fixed income, private equity, gold, and then commodities is like down there, cash and equivalents. Boy, if you speak to a fund manager at any event right now, they're telling you that they are parking stuff still in safety, right?
Exactly.
Still in safety. A lot of them still saying in cash. I think you heard me talking about this earlier, yesterday or the day before, that there's even a sense that they are waiting several sessions before changing their allocation because Trump just might change his mind, you know,
Exactly.
a few days later.
Exactly. This is the problem. You're a big pension fund. You don't want to make sudden changes. So they were eventually forced into it, I think, by the drops in April, that you had to change your allocations. And that's why you suddenly got this wave of this absolute avalanche of selling. But markets tend to drop very quickly but rise relatively slowly. So people might continue just to drip feed into US stocks. After the move we've had here, it wouldn't be surprising, maybe not necessarily soon, but within the next few months, to get a kind of 5% pullback or even more, just to spook everybody. But I think if you get this continued drift back in and sentiment still remains bearish, so generally when sentiment remains bearish, it's sort of a contrarian buy signal, if you can put it that way, because people are still expecting the worst. So as long as the worst doesn't happen, you just get this continued move back into stock. So that's the kind of view at the moment, that you shouldn't be surprised if we retested the lows in a few months' time, if a recession becomes more clear. But equally, I wouldn't be surprised, if I can put it that way, if we just continue just to grind higher in the near term.
Yeah, and Genghis Khan, if you believe it's going to grind higher in the near term, and if you agree with Chris's view, then, you know, take a look at, you know, legging in. We always talk about, you know, legging in and, you know, averaging and not going full in all in one go. In times like this, it's really good to use a Fibonacci. We like to have a look at the retracements to see whether you bounce off and you test certain levels. Look for confluence as well, you know, between your fibs and your moving averages. That could give you a very good early heads up. As we said, you know, don't ever trade just purely on technicals, but they give you a good heads up system, just like your heads up display when you're driving. I really am obsessed by this heads up.
It's always card.
It's cars.
always card.
But I just love the fact that now I can't live without it. I tested one with the heads-up display, and it's actually disadvantaged me. I feel disabled now when I drive a car with no heads-up.
Exactly. You've been spoiled, you see, and then you're a problem.
Oh, Genghis Khan says thank you. You're very welcome.
We do our best. It's really hard right now to say what might happen next, but certainly everyone got caught out by the drop, and now everyone's been caught out by the bounce. How strong it's been, certainly.
Bigger Beer saying so weekly 360 puts yesterday. Purchased last Friday. They're still on that United Health. Wow, Monkey Man. You need to have a side a chat, just, you know, United Health on this, because so many people are on that tray. Jack is waiting in the wings now, so we have to head straight to him. But final note from Chris, what is the biggest market moving event? Is it going to be PPI? Is it going to be JP later on?
And then maybe JP. We've always got Walmart today, haven't you?
Yes, we do have Walmart. Let's have a quick.
So that's the vital one. See how well they are holding up. And they were saying yesterday, I think, that wealthier shoppers are holding up Walmart sales quite nicely. So that's the other one to watch out for, really. If they say things aren't as bad as we thought, there aren't these empty shelves at the moment. That was the big.
At the moment, yeah.
Yes.
And now they're going to get their Thanksgiving and Halloween
we're all buying for
and
Christmas.
Christmas stuff. Cheap. But just a key note, because I do watch the retail space very, very closely. For those of you that trade Walmart, pay attention to what's happening to the likes of Klarna and the buy now, pay later companies like Affirm, because they are sacks. I know that you either still have this on your books or you've unwound now. They seem to be now recovering slightly, but they had a really, really tough February until April. It was really, really painful there. And Klarna, of course, making all those job cuts that we've seen on the news recently. Right. Thank you very much. And we will see you on the floor. Jack Maguire is coming up next to talk about volatility and what that is showing us about the impending coming US Open.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, Jack, welcome to the show. It's Jack McGuire, live from the trade desk for us. How are you, Jack?
Not too bad today, Ange. How are you?
Good, very good indeed. We had Luke Moore on earlier saying that every time I say Jack, he thinks about that character in The Incredibles.
I've never actually seen The Incredibles.
Oh
I know it's
my
a crazy
goodness
show,
me,
but
no!
never seen it.
How can you not have seen The Incredibles? Let's show him, Jack.
I don't know. Perfectly
Incredibles.
my age range as well.
Ah, you're so young. You're so young. This is Jack in The Incredibles, and he's very, very cute and lovely. And until he gets angry, and he's got all these superpowers. So, Luke thinks of this.
I do recognise it now.
Every single time
I
I
hope
say.
he doesn't recognise it because of my face, but
I was going to say to him, you have never seen Jack, you angry. Maybe that's why.
maybe. Yeah.
Well, Jack,
Don't try me.
Don't try, Jack. Don't try Jack. I've not seen it. It's but I don't want to see it because you're so well mannered. Speaking of well mannered, markets earlier this week seem to have been much more well mannered, but we are seeing a bit of risk off this session. US Tech 100, or rather the Nasdaq, down 0.75%. And Wall Street, which is of course the Dow, down 0.5%, and the DAX there down 0.2% as well. What is volatility showing us as we head into the US Open?
Today, not too excited, to be honest.
Not even with the PPI and JP?
Figures on. Generally with PPI, they obviously it comes in the same week as CPI. CPI takes all the volatility. There's a lot more focus on that. So we'll get the CPI figure through. That was on Tuesday. We got quite a decent amount of volatility before that figure came out. And actually the reaction afterwards kind of warranted it. We've seen the Nasdaq and the S&P take off. I think I was working that late. It was soaring high. I think the Nasdaq ended up over 2%. So we've seen the reaction there. And I think the market really cares about the CPI figures. PPI today will still carry some weight, but just looking at the volatilities, it's not really the same. It's not weighted the same in terms of the volatility. Nevertheless, though, sometimes that means if there is a shock, you can get in there with a lower volatility. So there's a bit of a chance for an opportunity. And then as for the Powell speech, I think it's an opening remarks. I'd be very, very, very surprised if he strays away from the line the Fed has taken.
Data dependent.
Exactly, yeah. If we see a change away from that, obviously you'll get a massive reaction, but the volatility is not really factoring that in as too much of a risk at the moment.
I mean, it's incredible, isn't it? We, a week and a half ago, maybe even 2 weeks, we were sat here talking about how, the 20s, the 30s might be the new normal. And now we're taking a look at the US 500.
Yeah.
This is the 19th of May expiry. Taking a look at the ladder there. I mean, we're back down to the 15 handle again.
Yeah, and that was the 19th, did you say? So Monday, there's the weekend included in there. Today we're still sort of in the 20s. I'd probably expect that to be
Yeah, we're still in the 20s.
similar for some of them. But yeah, we've definitely come back down, and it's stayed around this mark throughout the whole week.
Is this purely because that softer inflation print boosted investor confidence? Is that what it is?
I think there's a part of that. I think it suits the Fed's stance that they've taken so far. The whole idea of we're in a decent position at the moment, so we can actually afford to wait and see what happens with the tariff agenda and other economic factors. But it's not really new news, if that makes sense. It's obviously a beat on estimations, but I think the reaction from it on Tuesday was probably an overreaction, if anything. It's not really signaling anything different to what we expected beforehand in terms of the Fed decision. And as for the rest of it, this week, before the week actually started, I thought it would be completely dominated by the US and China story. Sort of negotiations over the weekend, the truce that they've agreed.
Another 90-day pause.
Exactly.
I feel like we need multiple clocks
until
now.
Trump's not in office anymore.
But you know, the fact that a lot of brokers also brokerages also cut their recession odds after the truce kind of signals that the market is breathing a sigh of relief, right?
Yeah, it's definitely breathing a sigh of relief. I think, that's basically what I mean. I expected a bigger reaction on Monday, and obviously we do see it go higher, but I think there's still a little bit of dependence there. I think Trump's meant to be speaking over the phone. I know he's in the Middle East, so speaking over the phone at some point and trying to get something a bit more concrete, a bit more actually planned rather than just this truce that we're at the moment. But it's definitely, there is some sort of reaction. I think I messaged you earlier to say it's surprising that for 2025 we're now level in terms of the US 500 or the S&P, which is just remarkable.
It is amazing, and especially the speed in which we've come back.
Yeah.
It's completely, and the yellow line there, trader friends, 5950 was where I expected the US 500 to end the year. This is before the US-China meeting at the weekend, but it looks like I'm going to have to revise that because we are getting very close to that level at this point, and we get more deals coming through, then I can, definitely see the US 500, at least in the near term, heading higher and following that upward trend there that was started in early April. It's incredible. I mean, NASDAQ up some 1.6%. It's just, let's have a look at that. And the other, sorry, come again?
We just had Rich there. I think you might have missed it.
Was he photobombing?
He was walking down some stairs that I didn't realise were behind the desk over there.
You've got a new background as well, I've noticed. What's happened?
We have, yeah. Yesterday it got put up.
Whoa.
It feels quite dark in here at the moment, actually.
Yeah, you had a white wall with a red IG logo, didn't you?
Yeah, exactly. I think if Elliot comes on at some point, you'll get a better view of what's in the middle of it. I can't change my camera at the moment, but it does feel a bit different. It's like a new office from one wall changing.
Wow. Just having a look at the Dow, because, we did have this pulled down or weighed down by several factors, including United Health as well, which I'm just going to show up because this is in the all sessions. It's still down 4.7%. And Jack, some of the other things that we talked about earlier on that we're going to discuss on the show is the fact that, will the CPI, PPI, retail sales, will any of the economic data that we're seeing today, will that mean anything to JP at all when he speaks? Or do you think it's just going to be, well, we haven't seen the effects yet because, even for the retailers, I don't think we're going to see any of the impact come through just yet we're all kind of looking forward into the next few months, right?
Yeah, I think so. I remember I don't think it was the last Fed meeting, I think it was the one beforehand, and we're saying it's actually quite interesting now. This Fed's been data dependent and looking backwards the entire time because they've been focusing so much on inflation. So CPI and I know for a while the PCE price index was a favored measure of theirs. But then with this new world and the tariffs, they've kind of had to switch from being backwards looking to forwards looking now. So it's a very interesting time. As a Fed member, you'd much rather be data dependent. You can see concrete figures. To have to try and speculate forwards, I mean, they'll be joining the rest of us in trying to predict where markets are going, where sentiment is. It's quite hard. So I think it's going to be interesting. There's a lot of scenarios and possibilities still, but I don't think any of the figures today really are going to change the stance that we saw last week when we had the Fed decision and press conference. I think they're going to try and stick to that. And I think as they have done over the last couple of years, if they do actually change their stance in any way, it will be choreographed very well, very politically by Powell and the other speakers you see, Goolsby, who's the other one, Waller, all of the figures that you see once they start dotting around in speeches after figures, I think you can see that they actually put quite a lot of emphasis on that figure.
Yeah. And it's going to be interesting what they say as well, because it comes at a time when we've had all these chats and deals that are being made across the Middle East. Trump, of course, in Abu Dhabi, having arrived, I believe it was earlier today. And this follows his recent stops in Saudi and Qatar as well. Just taking a look at the chat. Arthur Fox, hey, good morning to you. How will the other side of that 10 million puts trade work? Surely the seller have gone short to hedge. That's one question which I'll have a look at later. RSAC saying, and I did sell a firm. A firm is that company that is also in the buy now, pay later. RSAC, do tell me when you got rid of a firm, because I believe I got rid of mine about the same time as you, because things were starting to sour around the February period, and so I thought I can't stay with this anymore. Gotta get out, especially with Klarna as well. Here they had huge hiring. You heard me talk about it in January, but then it all started to hit the pause button. Now we're seeing Klarna cut many jobs. Have you seen those adverts out there, Jack, where it says, you know, buy a pair of shoes and pay in 4 installments?
Yeah, I've used it quite a few times.
Very
familiar with Klarna. Now every
we
time
need a
you do
poll
it seems
on
like
this.
there's 3 options.
How many of you out there, bang it in the chat and make sure you slam the like and subscribe button. How many of you, I want to know. Director Watson is on it because fake Phil is sat here, so I can't do it. So Director Watson, get on that poll. How many of you have used buy now, pay later? There's a Chipotle down the road from me, and I'm watching to see when they bring on what I saw in the US. Because in the US, you can pay for your Chipotle burrito in 4 installments. I mean, like that's crazy.
Really?
Yeah, it's so crazy. Have you used buy now, pay later? Polls up. All right, so put in your, wow, 67% saying no, 71% now, right now. Interesting. They're not in your camp, Jack.
Wow.
Jesse14 saying, don't most retailers purchase products at least a month or 2 in advance, meaning that price increases probably won't show up for at least another month. Yes, that is why you heard Chris and myself say that, you know, potentially Walmart and the other retailers might have good numbers this time round. I think Alibaba's also out, but that, of course, is in China. It might see that the results are still holding up pretty well, but it's actually the months after that because, you know, there was real concern out there whether or not they get stock through for the Thanksgiving, Halloween, and of course Christmas as well. Not forgetting that the whole manufacturing to delivery it's getting shorter and shorter. The whole mechanics of that is becoming more efficient. So we are seeing the impact of that lessened as well by the pure fact that getting goods exported from China all the way to the US, there's a shorter time frame now. Right. Looking at the poll, have you used buy now, pay later? 88% saying no, and 12% said yes. That is interesting. Very interesting indeed. Well, it makes RSAX and myself feel a bit better, if that's any consolation. Oh, there you go. RSAX said I sold in Feb too. Good on you. Talking about that, let's have a look at Walmart. Just very quickly, Jack, you ever shopped in Walmart?
No, actually. Never been there. I've been to the US, but I don't think we actually went to a Walmart, which I don't know how we avoided.
Director James is saying Asda in the background. I've been to an Asda.
Oh, yeah, Asda. I'm actually an Asda man. So, yeah, definitely have.
I am a Tesco and Sainsbury's by default because we don't get anything else kind of like monopolized by this. And I have to go to a big store because I have to get lots and lots of stuff in one go. I can't do the drip feed thing. That would drive me crazy. We do have a question up from another one of our viewers, Arthur Fox-Haig, Bigger Beers, answering that all these puts placed as a multi-leg order. That's United Health again. Jessie14 asking, do you have Walmart in the UK? We do not have Walmart in the UK. We have Asda's.
Yeah, Asda.
We have Asda's. They're kind of, you know, maybe priced like a Walmart. They're not big. Walmart's are just gigantic. Speaking of which, we don't have much time left, Jack, but I know that we spoke earlier and Jack's prepared this for all of you trader friends as well, because I told him all of you like trading gold and oil. So let's have a look at that on the options side of things. Which one do you want me to hit up first, Jack?
Let's do gold.
Okay, let's do gold. Right. Which contract?
Any of the contracts at the moment. You can check the daily. It's quite volatile today. So gold's one of the contracts that's reacting
27.
Just quite a lot to the day itself, but obviously with the figures involved, you could see that prompt to move at the same time. I'd say metals, especially over the last couple of days, have been very, very volatile. Gold's given back a lot of ground. I think I saw you in one of your last one of the last segments saying that there's a support level that we're about to be testing for gold. What was that level? Sorry.
So that level for all you gold traders out there is, I've written it on my chart just so that it's easy for me to remember as well, is 3,135. So
approaching very, very close to there right now.
Yeah.
I think, today's going to be quite volatile for gold. It looks like it's implied that way. Throughout some of the longer term contracts, it's a little bit more steady. We've seen it feed into the longer term still, but we still see a similar skew, which is a bit strange. We're still more positive to the top side as you go out past the June contract, which is our closest monthly contract. It's worth noting as well, actually, there's a few more gold contracts that have been added
I can
on the
see
weeklies there. So now we're pricing 3 weeklies each week, so the Monday, Wednesday and Friday. For anyone trying to gauge volatility off a figure during the week or a figure next week, that's a good one to use, just to have a look at the difference in IV. And between, say we have a figure on Wednesday, you can look at Wednesday versus the Friday, see how much volatility difference there is there. That could be quite interesting and help you quite a lot with gold to see what matters the most for the market. If that makes sense. But yeah, as we're going further out, the skew's not changed too much for the June contract. The front month, definitely seeing a lot more of a negative skew now. So whether the market is indicating we're going to see this move down in gold in the short term and then it come back up, that's kind of what you'd expect to see when you're basing it off the skew. But this support level is going to be quite a key one to see in the coming days, I think.
Right. Talking as well about this before we get to oil options for you. Arthur Fox here saying, is anyone here trading IG's OTC and NVIDIA options rather than on Tasty? I can't see call strikes above the May or the 136 June. Stock is at 136 there. Hearing Rich in my ear saying you'll have to call in. Is that right, Rich? Yeah, and Jack will be able to answer that as well. So I will put that in front of him after the show. Just quickly, because I've already asked Jack to prepare this for us. Look, us doing our homework here. Let's have a quick look at oil. Jack.
Yeah, oil's quite an interesting one because
yes, it's down
the last time...
a huge amount right now. So yeah, the last time you were on, you were telling us that the skew was still towards the downside, right?
Yeah, and on most of our contracts, it still is, but it's just an interesting one to bring up because I know the last time we spoke about this, there's two factors that were clearly playing an impact on that down move in crude, and it was the OPEC story linked with the Saudi issue of them, they're not going to support prices anymore, or they're happy to not support prices for a while now. The other one was demand concerns, particularly towards China. It's interesting because that China story, you could argue, has started to subside somewhat, but we're still seeing a move down, or at least skew towards the downside has still remained pretty consistent. So it's going to be interesting looking forward on crude. It's become quite volatile over the last couple of days just because of this down move. We're seeing that volatility go higher. But yeah, I think the tariff story, I think we both expected last time that that was going to play a major role as opposed to the OPEC story. But it looks like they're both playing quite a big factor. That down move seems.
Totally. And it's still, both those factors still weighing on oil prices there. And we just saw the IEA as well come out with a new forecast earlier today, as you saw me busting that live on air. Right, Jack, we have to let you go, but I will get that question, Arthur Fox Haig, in front of him. Email me on ask@IG. Also, slam the like and subscribe button. Have you subscribed to the new channel? If you haven't, do that right now because we want to get to 700 this week if we're not there already. Arthur Fox Haig, Monkey Man, you're saying that too, Monkey Man, as originally short for Associated Dairies. Wow, I did not know that. Did you know that, Jack?
I did, yeah. I think that's like a pub quiz question that just stuck in my mind for a while, yeah.
Fantastic. Right, I gotta love you and leave you there, Azaman, and you trader friends as well. But thank you so much for watching. We will be with you bright-eyed and bushy-tailed again tomorrow. But make sure you slam that hit and subscribe or email us. You know where to find us.